What's going on out there in the world of YouTube, Facebook? I decided to come on here real quick. Not too far. 1 second. I don't know if those are actually say go live. All right. So anyway, I'm coming in here to if you guys as you guys and girls are coming in, hit the thumbs up button. Not going to be on here too long, but as you guys can see in the description box, we're going to be talking about if you give me a thumbs up if you can hear me. Drop questions in. There's a chance to talk in live, all of the great stuff like that. I know I look a little, for the people that's catching this live, look a little rough. But been a pretty long day or whatnot. But I wanted to talk about some ways. We know that the market has been down now since October and pretty much lost all of the 2018 gains on the major indexes. And I'm pretty, I won't say I'm happy, but I am glad that this is happening. And, we have slipped in. I think we're down 17% on the S&P 500. About 17% from the all-time high on the S&P 500. I think the all-time high was something around October or something like that. Or maybe not definitely November. I think it was September, October. But everybody's been kind of running in a panic, and I've been happy to the point that I've been selling some of the I have been selling some of my bond ETFs, and I've been selling some of my gold ETFs. So, and buying more stock as the stocks continue to go down. And it was something that I made up on my something that I said. Okay, 1 second. We got somebody. What up, Prince? Should I wait? Hit rock bottom? But that's the question. Everybody wants to wait until rock bottom and buy everything up. But where is rock bottom? I don't know where rock bottom is. I don't know when we hit rock bottom and rebound. So I don't know. So it is a good thing. So what I do is I buy a little and little as we go down. If the market falls 500 points in a day, I have to go and I'm automatically that triggers buy something on that particular day. So, and what you're doing is when the market was hot and doing well, I was buying things like gold and bonds. And so I put out over the podcast. If you're not following the podcast, check out the podcast on iTunes, Google Play, SoundCloud, iHeart, wherever podcasts are being broadcast. So one of the things I was saying was I always told you guys that the market was going to crash. Is it a good time to buy put options? Yes, that's one of the ways you hedge against the market. That's something I'm adding to my portfolio, put options on the major indexes. And this kind of curves some of my losses I'm taking in equities. So what I'm doing is, right now you're seeing gold and you're seeing bonds become more sturdy, which always happens in every down market. And I'm not buying physical gold. What I'm doing in my portfolio is adding gold ETFs. So something like GLD. So I'm watching them very closely. I have been watching cryptocurrencies, closely. If you guys know, I haven't been a fan of cryptocurrencies ever since they came out, but I still watch them as well. And I want to see how they would act in the next downturn. What's going on, Beef? What's going on, my man, Beef? Beef ENT in the house. So I'm not going to be on too long. I have a show coming up here in Hawaii in about a little hour. So, and it's a Skype show that I do in Hawaii. But sometimes I put them up on here, some of the episodes. But it's something that, as the market is going down, you can take peace and blessings. Okay, cool. But as the market is continue to go down, this is the time where dividend paying stocks are great. And I'm looking at good companies that are on sale. Like for prime example, I like Berkshire Hathaway. Only thing I don't like about Berkshire Hathaway, it doesn't pay dividends. If you don't know who Berkshire Hathaway is, that's Warren Buffett's company. When you look at the finances of the company, it's pretty sturdy. Nothing has happened financially to the company. Many of these stocks, nothing has happened financially. It's just that, he's saying get out of large cap and get into small cap. That's one way, but the large cap and the small cap, there's still equities. So what are ways that I can get into equities, right? And actually, I like the other way. I'm taking my bonds that are pretty much kind of staying still if not gaining. And I'm taking some of my gold, which is pretty much doing pretty good. Or if I have an equity like I have, I'm pretty up on Berkshire Hathaway. I'm pretty up on Microsoft. I'm pretty good on Google. So those are companies that even though with the down economy, I've had them so long, I'm still up. So what I do is I'm taking some of those, I'm selling some of those, taking some of the profits from them, and I'm jumping into things that I see that has gone on sale, right? Buying back in at a lower price. But I'm not overbuying. I'm not just like buying everything. He says Fannie Mae. I have to look back into Fannie Mae. But I'm not buying everything like crazy, because we might have some more dropping to do. And the last thing you want to do is try to catch a falling knife. So I take good companies that's done extremely well. Nothing has happened financially. And those are the ones I'm looking at buying. Look at Nike. Anybody see Nike earnings today? If you haven't, Google Nike earnings. They came out today. Well, they came out yesterday after the market. And they posted today, 7% return. Sir John Templeton said buy everything. Said buy everything. But it hasn't. We're down 17%, which is cool. Right, but we haven't even hit 20% from our all-time high yet. So I think we definitely have more falling to do. Definitely buy, but I'm like buying like crazy all the way. Ask yourself this question: S&P 500, how much did it fall in 2008, 2009? How much did the S&P 500 fall? So let's say if the market went down, it went down almost like 50%, right? So, yeah, we're down 17%. Doesn't mean, oh, my God, it's a collapse. We're not to that point yet. You know what they say, when blood on the streets, do what? Buy when there's blood on the streets. When there's red all over the place, what happened to these companies, right? And the reason why I brought up Nike, I don't mean to ramble and be all over the place, but one of the reasons why I brought up Nike is we're here in December, coming up on Christmas. Happy holidays to everybody out there. And we're coming up on Christmas. We're coming up on the holidays. And, I remember telling everybody when the whole Kaepernick thing came out earlier, when it was like, oh, Kaepernick, and when he sponsored Nike and everybody was like, oh, man, this is a bad time. Nike's going to go away and do this. I told everybody, man, by Christmas, Richard Sneeze, what's going on? Say buy everything with blowing strings. I think political play will make I think so too. Political uncertainty, right? You see the tariffs coming on with President Trump. You see the uncertainty coming on with the budget. A half budget to keep some things open. So it's a lot of uncertainty in the market. And then what do people do when they see things going down? They start to sell, right? And am I selling some stuff? Yes, I'm selling some things that have done pretty well that I can get back in at a lower price. Yeah, Mad Dog leaving. Yeah, Mad Dog left. That's crazy, right? Cheese. He said sneeze. Cheese. My bad. Seventh inning. He said in the seventh and imprints, I have to double down. Yeah. So, but don't get overzealous. Don't take all of your cash and say, oh, man, the market is down 5%. Let me buy everything, because it still can have a major drop in to do, right? When the market drops anywhere between 10%, 5 to 10%, that could be seen as a minor correction. You're looking at anything between 10 to 20, that is a correction. You're looking at everything over 20, that's considered, a major correction, and could be going into a bear market. So we'll slide into there. We definitely triggered in my head that when we lost all of our gains from 2019, that's not a bad thing. Receives at 200. Okay, what question you got? They say it's 1934 bad. You talking about the market itself, Richard? Yes, your dividends are going to stay. The dividends had nothing to do with the market. The dividends with the company. A company, they announce their own dividends. Now, a company, what's the big thing I always tell everybody about dividends? Dividends are not what? Right? They're not, starts with a G. See somebody said it in the chat. So I don't see anybody saying in the chat. There you go. ALB, I just saw a guaranteed. Dividends are not guaranteed. For prime example, Coca-Cola will come out and say, okay, we're going to pay $4 per share in dividends. This is a facetious number. $4 in shares on dividends for the next 3 to 4 months, right? And once you pay the 4 shares the next 3 to 4 months, we're going to pay for that. And let's say we're going to pay. They said TD Ameritrade is, it's almost there. We're at like 17%. I think once you hit 20, that's what you consider a recession. But we're at like 17% from the S&P 500 high. But let's say if Coca-Cola decides to pay dividends, right? And if Coca-Cola decides to pay dividends next quarter, they pay $4. The company can decide to cut back or not pay dividends in the future. That's why I always said that when you look at dividends, you got to look at companies. If you're a dividend investor, look at the history of dividends. Still pay. I would say yes. Dividends. When you look at the major dividend paying stocks, you always see that the major big time guys that have steady growth, that pay stocks over and over and over and over, they have paid through recessions. You've seen plenty of companies that paid through 2008 through 2000, all the market crashes. So yeah, just because you see a downturn economy. And this is another great gem that I wanted to put out there to you guys and girls that are tuned in right now. When you look at a company's bonds, what are bonds, right? A bond is essentially borrowing money, a company borrowing money from the public and paying them back at a fixed interest rate. I only invest in blue chip. Yeah, Richard, you're right. Blue chip companies are large cap companies. So if you are a dividend investor, you have to look back and see that companies that are sturdy, because every company is going to have a downturn, right? So when you look at, I want to lose my chain of thought here. Look, the bonds. So bonds, looking at the bond rating of a company. This is how sturdy a company is going to pay into it, right? I know I'm kind of rambling all over the place on this, but this is like I like to come in. Ride out GM. With F, ride out, you're talking about Ford, right? Well, maybe $3 billion. I have to look into Ford some more. I've had that on my list to do. I got to look into Ford earnings report, see how their earnings are looking, how their revenue is looking. That's what I pay attention to more than anything else. The annual report. The annual report ain't hitting no much, then I'm not hitting no much, right? Well, F ride out GM. So we'll see. I got to look into more on Ford and GM. You said my guts tell me that they're going to fund them in the market. The market will go back up. That's what you're saying, LB? I don't know. We'll see. It's a lot that has to happen and go on. I'm not really mad about the market collapsing and going down. I'm not mad about the market collapsing and going down at all, because we needed this to happen. He said QQQ is down. I'd rather go into real estate. Yes, this one you have a diversified portfolio, right? Real estate is another one. The good thing about real estate that I always said is that when you move into things like real estate, that's why I put up the video recently about wholesaling. Wholesaling is a great way that a lot of if the Fed is not funded, will the streets stay open? One thing, what I'm thinking about real estate is that when the market is down, you can at least go find a place to live. You can at least live in your house while the market is down. When the market is down on the S&P 500 and NASDAQ, all the good stuff like that, you're kind of in a rut. If you own Berkshire Hathaway, it doesn't pay any dividends. Right now, it's going down to under $200. So you just have to sit back and, wait till it goes back up if you're a long-term person. If you're a 10-year person, you ain't got nothing to worry about. Yes, you're right. Corporate debt will be an issue. Why is corporate debt so important, Kendrick? The Volkswagen stock went blank on me. I can't even get a buy signal. Volkswagen stock. What's the symbol for? Should you buy Berkshire? Me personally, I'm long-term Berkshire. I am definitely long-term. I mean, come on, man. This company got billions and billions and billions just sitting in capital, just sitting there. So they're waiting on the next market downturn. Come on. I mean, That's the on Wall Street they call Berkshire to bail them out. Who was that? Lehman Brothers or Lehman Brothers? Lehman Brothers. Who's the other one? Starts with a B. I can't think of it. But all these guys call Berkshire to bail them out. These guys are sitting on loads and loads and loads of cash, and they're just buying up companies, and they've been slow, and they're going to become aggressive if we get another downturn in the market. So when I look at a company that is that financially stable, and I'm looking for long term, I'm definitely going to be long term Berkshire. And if puts come to shove, I'll be at Berkshire, end of October, every year I go out to Omaha to listen to what Buffett has to say. So yeah, definitely, I'm definitely gonna be, and I wouldn't be driving and flying way out to Berkshire, Omaha, Nebraska, every year just for steaks or just to hang out. I would. It's way cheaper for me to fly from Denver to. It's way cheaper for me to fly from Denver to Vegas if I want to just hang out. Yeah, that is true. I'll be surprised if he says Warren Buffett has a decade left. He's old as dirt. Yeah, he's 88. I don't even know if he got a whole decade left. I mean, go to 98. That's a big thing. But being that old, he's seen a lot. I mean, the guy has lived through 2008, 2000. How many market crashes have he seen and rebounds has he seen? So, but that's the thing about it. So what's this travel with Aaron? What's the difference between the Class A, Class B? Ooh, that's a good one. Will the market stay open? Well, the last government shutdown they had, the market was open. Now remember? Because let's think about it. If the government shuts down, I mean, a corporation is a corporation, unless the government is funding the people that work on there. Of course, A is preferred, right? A is preferred because you get voting rights. Let me see, how much is Class A? I think Class A is like, what, 250,000? Let me see right here. 1 second. I'm looking at Class A. Yeah, it's 288,000 right now. He said B is for poor people. Oh my goodness. But when you look at the performance of A and B, what's the difference between A and B? Which one performs better? So he didn't want to split his stock. So, yep, you're right. And you're wrong. Pull up go back to, let's see here. Let me see if I can share my screen. Give me 1 second. Yeah, he didn't want to split his stock. I'll give me 1 second. One. Um, 1 second. Who should I log on to? 1 second. See here. A and look at the charts here. Bird, okay. All right. Okay, we're going to remove that. We're going to remove that. We're going to go back to the max. No, we can't go to the max on that. No, let's go the other way around. Okay. Okay, chart. Let's see if I can show my screen. All right. Let me see. Can I share the screen here? 1 second. 1 second. I thought I was in here somewhere on this software. Okay, hold on. Okay, give me 1 second. I haven't done this before yet. I'm trying to share with you my screen. Where is... I might have to figure it out another time. I don't want to waste too much time. No. Cancel that out. How about chat? No. Got to be up here somewhere. I know I've seen it before. Hold on. This page. Oh my goodness. Okay. Well, anyway, what I was going to show you guys is I have the Class B stock. I guess for Warren Buffett's Class B stock came out in 1996, and it goes all the way to now 2018. And when you put on the performance of the Class B versus the Class A, they're the exact same performance-wise. Difference between Class A, Class B. Class A costs $288,000. Class B costs $191,000. Class A has voting rights. Class B doesn't. And I think if you had like $1 million worth of Berkshire, they have a meeting in Omaha that you can go to every year that they talk more intensely or whatnot. They have an open one for, all shareholders. Then there's one for like $1 million or something like that I heard about. So, okay, let's see. Let me get back in some of these chats. A is preferred. How cost to get in. B is poor people. Like, yeah, that's true. He said just bought a mutual fund, growth fund, and this market downturn is killing it. Yeah, some of everything. How much is what is the fees on that mutual fund? Oh, LB said, thank you, Prince, for what you're doing. It's nice to catch you live. I learned a lot from your info. Cool. Water stock. Who said something on a water stock? Okay. Well, what happened to Berkshire after Buffett kicks the bucket? Does the son take over? Now they have these guys. I think their name I think it's like, I heard rumors. I heard people say these guys. If you read his annual report, he'll talk about these two guys named Ted and Todd. And Ted and Todd is like, he's been grooming them for years and years and years and years. So, that's kind of been a word on the street at Berkshire that it's supposed to be like 4 CEOs, 2 or 4. But as we all know, when Buffett dies, Berkshire stock will go down big time. I think it'll go down. You lose the CEO dies, and these new guys are going to take over. But practically, I heard they've been running everything behind the scenes, and he's pretty much been grooming them. Okay. Now, for as far as I know, for Berkshire, that's what they've been planning. Filled at the limit. Make sure you get filled at the limit. I don't know. Oh, I think he's talking about what you call it. Probably not me, water stock. I trade iron corridors. Okay. Bear Stearns, that's who it was. Bear Stearns and Lehman Brothers. They was the one that was calling Berkshire to bail them out. So this tells you how much cash they have. Just sitting, you got to think about it. What caused Berkshire to go down from $200, from $220 to $190? Right? What happened? What happened financially? Nothing. Right? So to me, that signals buy opportunities. You said I had to get emotionally fit for this, Prince. It's like I'm trained to be a Navy SEAL. It's like I'm training to be a Navy SEAL. Oh yeah, you have to have tough skin, but you got to think about it. I remember seeing this back in 2008. This was right when I was coming into the market. I was like, I need to start investing. 2008 came around, and just like the guy something said, he pretty much paid. What did he do? He pretty much paid people, not paid people. He bought a mutual fund and watched it go down. That's exactly what happened to me. And now I look back on those days, and I wish I would have kept those mutual funds. I wish I brought more of those mutual funds, all those things. So I'm happy to see this. I've been waiting on a downturn in the economy now for, a little while now. So now I'm just studying and saying, okay, what are the ways I can take advantage? What are the ways I can take advantage? He said he's not a Navy SEAL. Yeah, he said he didn't say he was a SEAL. He said it's like I'm training to be one. I guess he's talking about the emotional high because Beef, you had about like, when I saw your portfolio, you had about like 300 items you were holding, and you got about like 300 items you were holding. You got a lot of equities, and I've always kind of telling people, hey, what about that downturn? Actually, my 401k, that's what I went and done. My 401k, I sold some of my bonds. I had a fixed index bond that I started selling and started jumping in on equities. Started buying large cap and small cap. All right. Because, I know I'm just so happy to see this, is think about it. And, even with my son, I just wish I had even more cash, to start trickling in and buying things or whatnot. I'm definitely not afraid of a bear market. Only thing I'm afraid of are, fly by night companies. If I had a bunch of like things like Bitcoin or companies that haven't been proven, but for me to go ahead and buy a company like a Berkshire Hathaway or a company like a Microsoft, Apple and Google, I have no problems or corns about them being down right now at all. McDonald's, I have no problem. Who's heard of Robert Kiyosaki? Who's heard of Robert Kiyosaki? Right? He said Bitcoin's an epic fail. Yeah, I mean, Bitcoin has, if you think the market is doing bad, I think Bitcoin is down. This time last year, Bitcoin was at like $19,000, right? Yeah, people who all, I mean, you got to think about it. Bitcoin from now to then is down easily, thousands of, I mean, what, 600%? It went from 19,000 to 3,000. That's 600% down if you brought it from its high. And we're talking about 17% on the stock market. So, and this was to be expected. We've been in an up market for how long? So, things. So those are the things you got to see. Those are the things you have to see. Okay, internationally is risky unless it's a dividend blue. Yeah, I'm not big into international at all. Speaking of international dividends. Yeah, international, I've just not been too crazy over things like EAFI, which is East Asia. What's that? East Asia, Far East, something like that. EFI index. Yeah, like last year, international did a bang up year. Up 25% and 20%. Then this year is crappy, right? And it's just that to me, it's just if you want to add a risk, I think you should have a little there, but not much. No more than 10% to me, international and broad. So it's just that when the U.S. is doing good, international is doing great, and then when the U.S. does bad, international does wow. So You just hire someone to do your taxes. How do I do my taxes? I don't really do my own taxes. CPA. Find one CPA to do your taxes and let them get to know you and let them do your taxes. That's the best way to go about it. How do you do? Let's see, who else said him? So I don't get too crazy with international. But the things I do like right now, I like large cap. I'm buying those large cap and I'm buying small cap. That's what I'm buying right now as the market goes down. Because everybody that was all excited when the market was going up and going up, everybody just started to buy and buy and buy. And I'm going to look for more companies. I'm going to look at companies that are financially sound, blue chip companies that are financially sound, that nothing has happened financially. They're just taking a downturn because everybody else is taking a downturn. I'm looking at corporate debt. I'm looking at your bond rating. Why is the bond rating so important? What can I tell from the bond rating? Keith Reynolds, what's going on? He said, I need to rewatch this. Yeah, we just talking around, Keith, man, about the how to act now that everybody, we're on the downside. He said, my portfolio took a hit. Everybody's portfolio is taking a hit. That's when those dividend-paying companies come in. Those wild companies that you brought, that's when you start to look at them like, oh, are they going to survive? Is this a good deal? So that's why you have to be very mindful of. But I'm not worried at all. I'm actually excited because I know in me, in my personal life, I know I retire in 4 years. So I want the company, when I retire in 4 years, I want the economy. I'm hoping for the economy to be on an upswing. So what that needs to happen is we've been on a upswing since 2008, 2009, almost 9 years, almost 10, almost a decade. Since we kind of been on a rebound coming into a bull market. So I wanted to see the bear tip its head around the corner. Okay, make sure I'm reading this right. I'm getting so many messages at the same time. Okay, dividends versus international subprint. My portfolio took a hit. Bond for your economy. Down means buy more. What goes down shall go up. Yes, dividends have been great. I got that from you. Thank you for that. Oh, yeah, exactly, right? 17 years exactly. What's the reason? What's the reason you think Buffett brought into banks last quarter? I think Buffett brought into banks last quarter. Everybody on Wall Street, you got to think of. I want you guys to look up Dodd-Frank. Dodd-Frank. I think his name behind it was two senators. I think the last name was Dodd, and the other guy's last name was Frank. And what they did was, after 2008 happening, they saw how 2008 happened, how strict banks became and Wall Street became. When President Obama was elected, he was against Wall Street, and he became against Wall Street pretty major when he became against Wall Street pretty major. So when he became against them, they came up with the whole Dodd-Frank Act to kind of put some shackles on Wall Street. So when Trump ran in the presidency, he was very big against. You guys remember a guy named James Fortland? James Fortland, the guy I call Uncle James, who always comes on the show like every 3 months or something like that. And he said this back when it happened. Wall Street, they love Trump. He was big on that because they believe that when Dodd-Frank came, it put the shackles on Wall Street. And now they believe that, hey, now that Dodd-Frank is being repealed, it's going to take the shackles off of Wall Street, spurting a big growth. So that's what a lot of people on Wall Street have been believing. That's been their guy. That's been like traditional banks like Bank of America, Wells Fargo, companies like that. When they look at companies, they look at it and say, financially, this company is still well, right? They're very financially studious people. They don't care about the hype and what's coming up, what's projected. They look at, does this company make money? How much money does it make? How much debt is it in? Right? And that's why I believe that, he didn't buy in. So, no. He's talking about last quarter. He brought some more shares, or what you call it, when it came out in his quarterly report that he brought more He brought into some more banks. That's what he's speaking about. So that's what those guys believe. Now, am I going out here saying? I tell people all the time, instead of chasing Buffett, because you don't know how much money they are looking to invest into a company and for what time period. So my thing is, trade to check. Now, okay, travel with Aaron. He's saying, are you still using ETrade? Check out Vanguard. Could be, but you got to think about it. ETrade sells Vanguard products. Travel by Aaron. So the same thing you get on the TD Ameritrade, not all of them, but majority of the stuff that you can get on Vanguard, you can get on ETrade as well. And the fee structure is almost not too crazy. And I like to keep my money in I don't like to have it like in 50 different places. I like to have it in a handful full of places. Like I have TD Ameritrade, I have ETrade. I think I got a little USA. And one thing that happened to me perfectly that I was waiting for this. When my son was born, Wesley was born, I got him a college fund, right? Because I got him a 529 plan, whatnot. And this thing is practically hadn't grown in like 5 or 6 years. And I used to put money into it. Then as I got wise and started to learn about custodian accounts and ways to invest, I said, man, so I just never put anything into that 529 plan. And now that I just thought about it, I was like, hey, that's perfect. That's a perfect thing to go cash out, pay the fees, whatever I got to do, to be able to put into his custodian account, to be able to take advantage of downturns in the economy. And that's something I saw a long time ago when I was going to go cash it out. I said, I'm not going to do it, Well, not guaranteed, Richard. First of all, it's not $10 on ETrade. It's about like $6 now. And the fees have gone down. 1, 2, depending on what you buy. Daylon says this week feels like the panic in the market needed. Yeah. Did I like it? No. Being a bull is tough right now, but hopefully we get a healthy bounce, but need the Fed and Trump to stop feeling negatively. Well, you got to think about it. What did the Fed just do? What did the Feds just do? The Fed just raised interest rate by 0.25. Why did the Fed raise the interest rate by 0.25? Does that mean they're bullish on the economy or bearish on the economy? Why did the Reds raise the interest rate by 0.25? I put out a video on it just yesterday. I released an interview on it. So that's what guys, So Richard, you're saying they raised them because of tariffs. Why did they raise the interest? The federal government, why did they raise interest rates because of tariffs? I want to hear your thought process. We got to think behind, different things, right? China, it's a housing market, a little to do with it. China bullish. Yes, when the federal government, that's a clear sign. When they're raising interest rates, that means that they're bullish on the market, right? It's their way of like, hey, we think the market is. I think they was noting the strong jobs report, but that's something that's going to cool off the market instantaneously. When I start to see the government, the Fed lower interest rates, that's the biggest opportunity to buy. I remember that I didn't know what federal government interest rate were back in 2007, 2008, 2009. I thought it was the end of the world. I was 22, 23. I'm like, man, we're in Afghanistan. I was in Iraq at the time. We was in Afghanistan. We was in Iraq. Gas prices was through the roof. People was getting kicked out of the military. People was losing their jobs. Lehman Brothers went away. Lehman Brothers, what was the other? Bear Stearns, Lehman Brothers. And Uncle James that you see that comes on here, his broker was Bear Stearns. So a lot of knowledge that he lived through the 70s, 80s, 90s. That's why I love to have him on the show. But Bear Stearns, Lehman Brothers, Fannie Mac, Ford, General Motors, all these companies was collapsing. I'm like, man, federal government is lowering interest rate. I remember hearing those. They lower interest rate to an all-time low. They lower interest rates to 0 to boost the economy. And I'm like, wow, what does that mean? Man, if I can hear something like that today, That is tremendous. That would be like no other time to buy when you see the federal government lowering interest rates. They lower interest rates to stimulate the economy. Right now they're raising. They just raised them by 0.25. When the government says, "Hey, we don't want to raise them," then I'd be like, okay. Then I would say, okay, well, they may not want to. What you call it? So, Stephen Lane, what's going on, my man, Stephen Lane? I gotta mention that. I haven't read your article yet, guys. This is Stephen Lang. He just hit it in the chat. A very good buddy of mine from the military, from the Navy, that you know, went on to start his career and to head on to be the next big guy on Wall Street hedge fund. And he wrote an article on Seeking Alpha. Congratulations! He has an article on Seeking Alpha that he wrote about CVS, the forgotten dividend stock. Yeah, that was Walgreens. I don't know what's the difference between uh, Walgreens and CVS. I'm going to, I haven't read his article yet. He was talking about the dividends on it, but I think that was Walgreens that replaced General Electric and the Dow. So that was pretty good. So I haven't seen that, but I'm glad to see you here, Steven, man. Definitely, CVS. He said CVS isn't worth buying. Doesn't croak. I'm not. That's why I got to see. I don't know if CVS and Walgreens are together or CVS is owned by somebody else. Steven, what do Steven was merged with Athena, or is that Walgreens? Yeah. Walgreens was the one that replaced General Electric, because CVS and Walgreens are kind of like always by each other. So when you look at brand, it's like they're kind of almost together with each other. So that's why I can't be what you call it. The Athena deal. I should have Stephen call in and tell us about his article that he wrote, because he seems to be pretty knowledgeable. Well, I know he's knowledgeable because I glanced over his article, but I haven't got a chance to sit down and read it. I definitely will read it, Stephen. Let me write that down on my to-do list on Seeking Alpha. And feel free to drop your link in here too, Stephen, on Seeking Alpha, because I follow Seeking Alpha too. Drop your link to your article in the description box. Not in the description box, but in the chat box. Steven, Seeking Alpha. Seeking Alpha is in the house. I do follow Seeking Alpha too. What time is it? I want to make sure I'm not too late for my next show. But some ways to hedge is, dividend paying stocks. When those dividends are coming in, that's a good thing, not to be worried about if you're a long-term person. Richard made a good part. Why buy the company when you can buy the parent company? Is it too late to think 100% on my end? Let me see. Maybe I'm missing something what you guys are saying. Yeah, it's saying not raising rates for 8 years was dangerous. Trump, CBS, the forgotten dividend. Okay. I'm not getting what you're saying, Travel with Aaron. Is it too late to think 100% on my end? I'm kind of lost on that. What do you mean by that? You know what? Let me get this link as well. Share it on my Facebook. One second. But it's nice to see everybody. Keith is in here.
Robinhood is an investing app that lets you buy.
Oh, so many Robinhood apps. Ads that run on this thing. It's crazy. So here we go. Let me share this out. Because I always forget to do this, to share this on my Facebook page. If you're not following us on Facebook, check us out on Facebook. The Investor Show on Facebook. Also, you got Royal Financial on Facebook. The parent company. So All right. You know what? Let me go live on Instagram. I never done that before, have I? So if you're not following me on Instagram, check me out on Instagram. You know, give me 1 second. Is it no? Is it this way? There we go. Live. Question. So I'm going to live on my Instagram too. If you're not on my Instagram, follow me as well. Oh, wait. All right. I'm on live on Instagram as well. Can y'all see me the right way or my turn? But, okay, let's get back into it. Walgreens. And for the people that are catching this back on Instagram, we've been on YouTube live now for 30, 40 minutes. So, okay. It's a different company. CVS brought Target RX. KR owns, what's that? KR owns what now? I'll make sure I got my camera right. Saying KR owns Walgreens. Why buy the company when you can buy the parent company? It's like, when did Kroger buy Walgreens? I think they did a partnership. Said yes, back in 2016. Rite Aid, I think, brought out Walgreens. He did a merger, learn about it, because I did a seasonal job at Kroger. Was part of the orientation. I think KR is a parent company. Can you post a link? Oh, so you're saying Kroger owns Safeway too? That'll be news to me. How can I post my old KR job orientation from 2016? Is it a PowerPoint presentation, Richard? Kroger, you say Kroger owns Walgreens? Wow, that's something I didn't know. Yes, for the people that's coming in, we're live here on YouTube, the Investor Show. We are live, and we're talking about, the topic is, what was the topic? I can't remember now. I know we're talking about, in a down economy, right? If you're in a down economy, what can you do? How can you invest? Things like that. So for the people that's catching this on Instagram, that didn't check in, that's not on YouTube live, this is talking about, that's what I want to do too. I'm going to get this whole thing, I'm going to get my whole wild, King Breezy, what's going on, my man? You doing all right? He's saying there's so much to talk about. So yeah, it definitely is. I'm going to look that up. Y'all are saying Kroger. Richard, you're saying Kroger is owned by Walgreens. And this started, where is Steven? Steven should know this. Steven, you should definitely know this because you just wrote an article on Seeking Alpha. And Seeking Alpha, you wrote an article on it about the lost dividend. Oh, King Breezy is on Instagram. He says, so much to talk about. I'm great. How about you? I'm doing pretty good. Doing pretty good. In between, we've been on YouTube live now for about 30, 40 minutes. And I decided, hey, you know what? I don't really do Instagram live. So let's check out Instagram live as we talk to everybody. So we're talking about the down economy. We're talking about the down market. S&P 500 is down 17% from its high of 2018. So I'm getting ready to do a show here in about 30 minutes in Hawaii, Honolulu, Hawaii. I Skype in and do a show. But we've been talking about that, and I've been speaking about how I'm glad that this is happening. I retired in 4 years, so I'm glad we see I hope we see a downturn economy starting now, going into 2019. And I hope we start to dig out of it around in 2020. And we start to dig out of it in 2020, really start to dig out of it in 2022, be on the up and up in 2023. And that's what I'll be out into the economy, looking to move around the world. So I definitely like to see that, even though I know it's going to happen. Hey, I'm back. I had to go get on my laptop. Okay, so Stephen Lang here. They're saying that Richard is saying that Kroger owns Walgreens, if I'm not mistaken, right? And we're not sure about that. I know you wrote an article on this, right? You wrote an article on uh, Walgreens being a forgotten dividend stock. And when the economy is down, dividend stocks are amazing, right? So Stephen here wrote an amazing article on Seeking Alpha. If you're not following Seeking, okay, yes, yes, we know that Walgreens is publicly owned, a publicly traded company, ticker WBA. But is it owned by Kroger? Is there a parent company to Walgreens? Because they're saying, hey, why buy Walgreens when you can buy the parent company? So who is the parent company of Walgreens? All right. So King Breezer, I know you're the only person I got on Instagram Live. So I'm reading out the chats that people are doing inside of YouTube Live. And if we get chats on Instagram, I'm going to bring them in on what you call it. Okay, so Steven is saying Kroger is not the parent company. So Richard, I'm not saying that you're wrong, but I know Steven had done a pretty extensive research on Wells Fargo, not Wells Fargo, but Walgreens, and he sent me the link to it. So we're gonna definitely look into it. We're gonna see who's right and wrong, right? Who owns Walgreens? And Walgreens, the reason why we're talking about that is it's a good dividend paying stock. And Walgreens just got added into the S&P 500. No, the Dow Jones. It replaced what you call it? It replaced Walgreens replaced General Electric. Kroger's not a parent company. They have a partnership. So, okay, that's good to know. But we was speaking about it for the people that's on Instagram that will catch the Instagram. I don't know. Does Instagram do playbacks? I'm not sure. Right? I'm not sure if Instagram does playbacks. But the thing about it is, for the people that's on Instagram, I'm also on YouTube Live as well, and we're talking about the down ways to invest in a down market. It does playbacks on YouTube. Okay, Keith. Okay, cool. Well, if you guys not following me on Instagram, on the Investor Show on Instagram, and I'm also the Investor Show on YouTube. So check it out. Okay, Kroger will sell more brands and fresh food. Every manager in Colorado teaches that in their orientation. Okay. What is this? I don't know if you can put the thing in. But yeah, so that's a big thing that we're looking at now is to say, hey, what are ways that we can invest? Right. And something I had told everybody since, hey, it's all good now. Everybody's investing, everybody's making money, but what are you doing to hedge yourself? Okay, so he says, what about trading options in a down market? Yes, we spoke about that earlier, where you can buy puts, right? You can buy puts in a down market as well. And saying, hey to everybody that's logging in on Instagram, you can buy puts in a down market as well. Oh, hey, she's waving. Who's that? Jackie Personal Trading. Okay, Jackie Personal Trading on Instagram Live. So the people that's on Instagram, we're also on YouTube Live as well. So I'm reading the chats back and forth from Instagram and YouTube. So, vice versa. If you're following on Instagram, follow on Instagram. You follow on YouTube, follow on YouTube. So buying puts on Apple. Me, I'm buying puts on the big indexes like S&P 500, things like that. So what I'm doing is I'm selling some of the gold because I know in times like this, if it continues to happen, gold I don't even know why I'm wearing these. I don't hear nothing through this, so I don't know why I was wearing this. Okay, Financial Fitness is joining. I see more people coming in on Instagram Live, but guess what? And these chats have kind of blown up here. J&J Johnson & Johnson. Oh, yeah. That's what you're talking about, J&J, right, Richard? Yes, Johnson & Johnson. Let me see. What about J&J? Let's see. Let me see. The frustrating bringing on district management. Okay. All right. But more people coming in, more people saying hi. But guess what, guys? I got to get running. I got to get going. I got to get ready for the next show, right? I do a Skype show out of Hawaii, Honolulu, Hawaii, every other week that I usually play back some of the episodes back here. Think Tech Hawaii, the first people to ever give me an opportunity to do television, which was public access television, Richard Sambu. But I got to get running, guys. I definitely appreciate everybody that's on. I got to do this more often. I got to do this weekly almost. So we have Instagram Live here. Instagram Live is here. We have YouTube Live that's here. I should probably get on Facebook Live too, right? But anyway, I definitely appreciate everybody that's tuning in, but I got to run. I got to go. We're going to do this more often. I promise you. I know somebody saying, what's the best penny stock potential in leaders? But I got to run. I got to go. But thanks, everybody, for tuning in. Thanks for everybody for coming in. Looking forward to the next one. Steven says, yes, I need to do these more often. So, all right. Peace. Come on, Wes, you want to say something?
Yes.
It's almost time for you to. That's not time. Say hey to everybody.
Hi.
See, say everybody. That's YouTube.
Hi.
Let's say hey. That's YouTube.
Hey, that's YouTube.
That's YouTube. And what you call it? All right. Now he wants to play in the camera. All right, Wes.
Okay, bye.
Bye-bye. But okay, I got to go. Skype handle. I'll put all that stuff out later on before we can get the next one. All right? Peace. Be safe. I'm out. Thanks.